it's time to spotlight advertising technology in streaming and connected TV and how AI is transforming the ad business. Tim Vanderhook is with us, CEO of Viant. Thank you for being with us. We'll look at the ticker symbol DSP, folks. Down, tough day today for your name, for the group overall. But advertising, there are plenty of ad dollars, and you're going to tell us, the bright spots ahead going forward. First, tell us a little bit about your company.
Yeah, Viant Technology we're called a demand side platform. So we help buyers of digital advertising place those ads, whether it's in streaming television, streaming audio, or digital out of home. So we help them execute their ad campaigns that they put in market, and we do it all electronically.
Where are you seeing, so you have the buyers, you have the folks and the ads, where are you seeing the most demand? Where's the best place to place ad? I mean, I always think of sports, right? I mean, of course, the Super Bowl ads are a great place to place an ad if you have the money to do it. Where's the best place to place some ads?
Oh, absolutely. Today, what marketers love is streaming television. They can't get enough of it. It's a huge market, and it's a big transition that's happening. There's $60 billion still spent in linear television today. That's a huge tailwind coming into streaming. So marketers are buying tons of connected television ads, and we're helping them lead in that and place it the most effectively. But most importantly, what makes Viant unique is we really focus on helping advertisers understand what they get for their money in return. What were the business impacts in driving growth through that advertising spend? And that's why marketers are overwhelmingly choosing Viant Technology. We had earnings yesterday. We delivered a blowout quarter in the fourth quarter, revenue up 40% year over year, adjusted EBITDA up 31% year over year to cap a great year. So today, although a blip in the market, certainly a great opportunity to enter a great company at a really advantageous price.
Yeah, I saw within the reports after the bell, you had a beat on the top and bottom line. When we look at the earnings picture going forward, how does it look?
It was great. We guided for the we've had 8 quarters of greater than 30% adjusted EBITDA growth. We've had 6 quarters of greater than 20% revenue growth, and we just guided similar for Q1. So this is a company that's on a roll. I think all your viewers will check us out and hopefully look at the fundamentals and see what a great opportunity digital advertising presents.
All the names in the space actually have some down arrows today. A 30% sell-off, is that troubling to you? I mean, are they just completely missing the mark? That's a huge sell-off.
Yeah, it's a large sell-off. I think we have unique aspects of our equity. We have lower trading volume, so sometimes one investor could tip the scale either way. It's obviously a head scratcher when you think of in 2024, we just delivered 30% revenue growth with 53% adjusted EBITDA growth, and we're really well positioned in the fastest growing sector of the market, and we have industry-leading growth amongst all ad tech companies that are public. So I don't really worry about today. I'm sure this will work itself out and is probably more of a macroeconomic issue, which impacts the smaller market cap that we have.
Yeah, I'm glad you came on today because, as you noted, you were really happy with the latest quarter, and you are seeing demand, particularly in streaming television. What happens to old, regular, linear television? You said there's still a good amount of demand there, right?
Oh, yeah. It still commands quite a bit of viewership from an older demographic of users who are comfortable with their cable or satellite operator. But that transition is definitely on the move. And so there's still a lot of money over there that will be spent in the streaming sector. Each year, more and more money comes in. So it has something like a compound annual growth rate of connected TV of greater than 15% this year, I believe, is the growth in that. Just a lot of tailwinds. And this is even before we begin with the application of artificial intelligence, which we're a leader in and launched a product last August to great fanfare amongst ad agencies.
Is there a sort of misnomer on the economy at this point? Because some of the indicators we've been getting have been showing some nervousness. The market is showing some, whether it's consumer sentiment or confidence. Are people going to have all their stream? Will I have Netflix and Hulu and Paramount and Apple? How many streaming services do people have at a time? Will that be the same or more in 2025?
I would say it'll probably be the same or more. What the American consumer has proven is we love to be entertained. And these new, smaller packages that offer access to amazing content, and more, what you're seeing in 2025 is the addition of these live channels, very similar to us here. So one big change from 2025 versus 2024 in streaming is the addition of the live sports rights deals that Amazon, Netflix is going after and transitioning all to streaming, which is about 40% of all ad spend in the fourth quarter of 2024 was focused on live sports. So another big tailwind this year is live sports is really coming online into streaming in the same way that it is in linear TV, and should be yet another lift for our company and everyone in the streaming space.
Yeah, I mentioned that earlier. I'm glad you solidified that. There's no doubt sports are it. And you mentioned Amazon now because, right, Thursday Prime, everybody could watch football. Tell me which companies are spending the most. If you were to name 3 or 4 or 5, who's got the biggest ad budget these days?
Oh, it's still the same big Fortune 100 companies, Procter & Gamble, Unilever, but there's huge new entrants in the space. If you think of the online gambling market, didn't exist prior. Now it's a legal market in many states. So they have come in, DraftKings, FanDuel. There's many public companies that are out there spending lots of money. When I look across the fourth quarter and look at the categories, we had almost every single category was up greater than 30, or excuse me, 6 of them were up greater than 30%, and most were all up with only 1 or 2 that were down. A little bit of softness in retail in the fourth quarter was kind of the one unique data point that I would say. And advertising is that canary in the coal mine for consumer confidence in business confidence, because it can be stopped or paused at any time. So I see a strong economy going through the fourth quarter, and we see that carrying through in the first quarter. Obviously, lots of information coming out of the administration almost in real time, which certainly affects the markets on days like today.
Yeah, I like the big picture perspective of how the economy was doing in the fourth quarter, that you see it going through here through the first quarter. You do have the sort of wild card of what happens in Washington and such, noting that the retail part had a little softness, but you said 6 categories were up more than 30%. The rest, most of them were higher generally. Retail, a little softness. Anything else show a little softness? And I'll let you go, Tim.
No, really, that was it. And so I think it's broad strength across the economy as we closed out last year. Looking forward to 2025.
Looking forward to having you back. Tim Vanderhook, CEO at Viant. Thank you.
Thank you.